Mr. Mark Selby, how are we, sir? Or should I
Very good.
say,
Yes.
Kong Hee Fa Choi?
Hai Fa Choi.
Hello,
Yes.
Fa Choi. Are you Cantonese or Mandarin today? What's that mean?
Toronto's mostly Cantonese. So, yep. So
So
that's
common. So
the way I learned to say it growing up. So,
yeah, I think it's kind of interesting, isn't it? Whole. How do you pronounce it? Right. Okay. Well, Gong Shi Fa Chai. I'll go with then. What's been happening? What's been happening in the nickel world? I mean, is this year going to be different from last?
yeah, I mean, as per our forecast last week, we see prices moving back up to 20,000 with a decent move in the first quarter. We did start out pretty strongly. We had a break up towards over $16,000 a ton off the bottom at 15, so about a 7% move in the first 2 weeks. Unfortunately, the whole base metal complex got caught up in what I'm calling Trump turbulence, which is depending on the day, there's a different tariff number on a different country, that he's waving around. So not surprisingly, that's causing people to pause, particularly in Asia, because everyone is China is the big target eventually. So so that brought metal price, the whole base metal complex, back down. Now nickel's done better than some of the others. It's down about 4% off of that peak, whereas some like zinc are down 7 or 8%. So we'll see what happens as we move forward here.
It's interesting. We were talking with I think it was Lifestone. I mean, with their I think Kambala project. They're sort of bouncing around the states trying to work out how to play it as well. And I think they kind of concur with your view that perhaps communications need to improve with the U.S. government, so people can actually sort of lay out the plans for this year. What do you think it's going to take in terms of statements from the Trump administration to kind of calm everyone down, or at least give them certainty of what the future looks like?
Yeah, the sad reality is I don't think we'll ever get any certainty. I think it'll be one of those things. You know what? If the kid is always screaming, and you just drive on and just ignore it, ignore the screams. So I think that's likely what'll happen, and people will just say, okay, they're just going to be saying stuff all the time. Just need to see what actually is going to happen. So here in Canada, we have it was originally on the day of the first thing he's going to do is put a 25% tariff on all things Canada. That ended up being a 0. Saturday, the February 1st, is supposed to going to be another big tariff day. So we'll see what happens. Our big trump card is literally we supply about 40% of the U.S. oil that's imported. So we're a pretty big contributor to the overall oil thing, and gasoline prices would go quite a bit higher in the U.S. in certain U.S. markets if we retaliated. So, and the other big thing is, some of the big donors like the Cook brothers into the Republican Party have a bunch of refineries that rely on Canadian oil. So, again, I think you'll see a lot of bluster, but not a lot of hard stuff. And at the end of the day, there was no U.S. nickel consumption, no U.S. nickel producers to protect. So, I think nickel, even in some sort of tariff world, nickel is something that Canada just won't see anything on that front. For sure.
But here's the thing, though. I think there's a lot of kind of quite strong and good language for nickel producers outside of China, in sense of that whether it's the bifurcated market, whether it's this the backing of battery mineral companies. It still seems to be there. I don't think that's going to go away. We're not seeing so broad, sweeping everything off the table and starting again on that one. It's a continuation of what was, bipartisan support. I think.
Oh no, the U.S. has always been. I mean, it's one of the few issues that both Republicans and Democrats are 100% lined up behind. So at the end of the day, they want China out of their supply chains, and particularly for those minerals that are used extensively, by the military and key industries like aerospace. So again, we should be in good shape on that front. And one of the other big parts of being in Saudi for the Future of Minerals Forum, we talked with a bunch of the European groups that are are now government backed to provide capital into the mining space, and again, Europe is looking to step up in a big way to make sure that they increase the supply of critical minerals from valley countries, and that's
Right.
really what we're looking at.
Let's look at the other side of the coin there. So we're talking about what Trump's going to do, but obviously China, can react as well. We've seen them also talk about, shutting off supply of, other metals and minerals, commodities. It's all going to stay in-house. When it comes to, obviously, nickel, we talk about China, Philippines, Indonesia. That's a triumvirate, us controlling the markets over there. As we said from the outset, it's New Year for Chinese New Year. So probably not a lot of data out there to go on. But are you seeing anything that we should be looking forward to?
Yeah, so we've seen stainless steel prices. As I said, Chinese stainless steel prices are always a good indicator in terms of overall market direction. And so, we've seen prices as nickel prices bottom, stainless steel prices, were through a cycle bottom there as well. And we've, started to see them edge higher, started to see nickel pig iron prices edge higher. So, today is Chinese New Year, and it's a big, 2-week holiday period, for the most part. So sometimes you see a squeeze into that period, but again, with the Trump turbulence, no one's lining up to take a big bet in either direction. But I think once we get a Chinese New Year, we're seeing a lot of job owning in terms of Chinese participants in the market trying to, I think, talk the nickel market down. Remember, Tsinghsan tried to go short the market 3 years ago and broke it because they did not get squeezed out of existence only because the LME came in and stopped trading in the market at that time frame. We saw a big move in the first quarter last year. So again, I think post Chinese New Year, we should see, we'll see the direction for the year. And again, the Indonesians on the other side have been making noises around, having quotas in the 200 million ton level, which would, be an actual reduction in mine supply this year. So we do need some growth out of Indonesia because the year-over-year impact of all the cuts announced that last year, are still flowing through. So, we'll see what happens as we go through.
Okay, and obviously I know it's fashionable to talk about EV because it's the new kid on the block, but stainless steel is the backbone of this industry. Is that market growing?
Oh, big time. I mean, again, the rhetoric around last year in terms of things slowing down, and one of the themes that I've been banging on about through the entire history of this podcast is really, people get the long-term nickel demand growth rates wrong. Analysts end up down around 3% rather than the 5 to 6% we've seen historically. Last year, we had a big surprise. Remember, everyone had really big surpluses. Then turns out, the Chinese were undercounting their stainless steel production, and everyone revised their numbers, and things weren't nearly as bad as they'd indicated. Well, China just reported their stainless steel production growth for 300 series stainless steel. Again, that is the single, that one bucket is the single dominant use of nickel globally. And production was up 9.5% in 2024. Again, and this is a year where China has had all kinds of headwinds, concerns about the property market, blah, blah, blah. And again, we still saw nearly 10% growth in that sector. Right now, the INSG data is showing Chinese demand up 3.8%. Again, I think we'll see some revisions to that number over the next month or two. And again, global demand is up 5%. So again, globally, pretty decent, robust stainless steel numbers. And just to remind everybody, we've seen nearly 9% growth each year on average since the start of the decade. And don't expect that to slow down too materially. And again, that's much higher than where it's double what most analysts had forecast, 5 years ago, and much higher than what most people have as a go forward forecast.
Right, and just sort of sticking with those sorts of numbers, that's global numbers, not specifically aimed at Asia. But what is the kind of split? I mean, where's most of that demand coming from? Is it still kind of out of Asia, or is the US sort of growing as part of that equation too?
Yeah, no, we saw stainless production actually increase globally through the first 2 or 3 quarters. We'll have to wait to see what the final fourth quarter numbers are, but we've seen stainless production grow globally. The key piece is not so much with stainless. That's where nickel gets transformed into stainless steel, but a lot of that end use consumption, which we don't necessarily have as much visibility on, is again would be developing countries in Southeast Asia. As the Mideast starts to diversify away from oil, Riyadh building NEOM in the desert there. Those types of things use huge amounts of stainless steel. So it's more global growth than any one specific region.
Right, and just coming back to something you said earlier, obviously you're in the Middle East at a couple of conferences recently, and there'll be a lot of, like, I guess, new money groups there, but they'll be looking for very specific things. But what was the level of education, understanding on nickel and the kind of the macro for it with the kind of those audiences that you were talking to and listening to?
Yeah, so that was our first time. I'd been to the Mideast about 10 years ago, meeting with some investors at this time. I would say today, again, based relative to groups I see globally, they are way up the curve. For the last couple of years, Saudi and the other Emirates, have made very public statements around, realizing that, oil is not going to be a high growth market going forward. And they need to take this opportunity to reposition their economies, focused into new sectors. And again, most of these new sectors, end up using a lot of stainless steel, and they recognize the importance of global critical minerals production. Again, they're not necessarily crazy about Chinese dominance of everything. And so, yeah, I would say most of the big, I would say most, a number of very large family multi-business businesses, want to get into the mining and critical mineral space. You're seeing the major funding agencies in the Emirates, the sovereign wealth funds, want to deploy capital into the critical mineral space. Some of them want to do it on their own. Some of them want to do it alongside, other sort of industry, participants like Western mining private equity groups, or other big companies. But they have gotten the message loud and clearly. Again, that region, they don't get out of bed for less than $50 to $100 million type investment to be able to, have any impact on the needle at all. So, it was a pretty exciting week. And there's let's say there's a lot of follow-up activity going on post those meetings.
Good. But I think it'll be an interesting one to sort of see how that evolves, because I think a lot of North American juniors hoping that there'll be money available from that part of the world, but it kind of feels you've got to be quite far down the curve in terms of development or production or skill sets or bringing something to the party and not sitting there with your hand out. So we shall see how the folks over there handle that. Right, company news. We'll start down under. Centaurus, what can you tell us?
Yeah, so just after our last call, they put out some excellent news. So concentrate, they've upgraded their concentrates pretty dramatically, up to a 34% nickel content from the 12% number they previously had. Again, they have a mineral called millerite, which, along with our hazelwoodite and aurorite, are the one of the more common high tenor, high nickel content minerals. And so they updated their flow sheet, to be able to hit that kind of concentrate grade, which is great to see. Again, when you have 3 times more nickel in your concentrate, that really has a big impact on the overall economics there. And again, one thing, they have a kind of a unique concentrate, just the way that was deposited. They end up also having zinc in it and fluorine in it, which something smelters don't necessarily like. But when you have 3 times more nickel than you did before, and the content of both of those that has dropped, that's a big improvement there. So kudos to the Centaurus team for working through that. We had some more drilling news. Again, we haven't finished all the results yet from the drilling campaign last year. What was exciting, we published our Reed resource, which again we think is going to be a bigger, better deposit than Crawford. What's interesting is Midlothian, which is one of our southern properties. Again, a nice, good geometry from a potential strip ratio perspective. We've seen good grades in terms of, again, these deposits on average are going to be 0.2 to 0.3% nickel by and large. And we've had, the best hole of any of the regional properties so far was 0.29% nickel effectively from top to bottom, which is at the upper end of that range. And a number of holes that we've drilled there, have been towards that upper edge. we had results from 3 other properties. Again, very few majors are able to drill 4 properties at the same time. We tested 14 during this campaign last year, and based on we've seen and looking at the portfolio, we're going to add an 8th regional resource that we're going to get done this year. So by mid-year, we'll have a total of 9 resources, including Crawford. So, we really are unlocking what we think is going to be the world's largest nickel sulfide district.
I don't want to come back to you in a second, but we'll finish the news first. Okay. The other, well, it's quite local to you actually, Aston Minerals. They've made a little announcement as well.
Yeah. So Aston, who's one of our neighbors in the Timmins district, they are merging with an Aussie gold company. So remember, Aston was originally founded on a gold deposit in the area. I think it's about 1 million ounces in our area, and then did hit some nickel. They're merging with another company with the same sort of shareholder base in Australia, with a gold asset actually not too far from my old Beta Hunt project. And so they've decided, again, given where Aussie gold prices are, to focus on those gold assets for the time being. So we'll see. They were a good neighbor. So we'll see how they go there. And then in terms of other news, Vale announced a sale process for their Thompson assets. Thompson is an asset that used to produce about 40,000 tons of nickel. It's been underinvested for the last while now and is down around the 10,000 ton per annum market. Thompson's challenge has always been it's kind of the 5th kid in the family. Back in Inco days when I was there 20 years ago, there was Sudbury, Indonesia. Goro at that time was the bright, shiny object that was getting, a lot of attention and capital at that point in time. And basically, whatever was left over is what Thompson got. And a lot of times that wasn't a lot of capital. So this is an asset our team knows very well. We think it's probably one of the highest potential assets globally. And so we will definitely be participating in the process, particularly because in terms of unlocking value there, they have ultramafic deposits similar to what we have in Timmins. So, our team's expertise in that area, we think can add a lot of value to those assets. So
when you say participating, that's a process that's coming up. What's that going to involve? Is it extraction, or is it going to add real value to the portfolio?
Oh no, I think the potential to get near-term production, is always a great bolt-on to a development story. So again, we'll see where the value, look at the latest data, see where the value is. If it makes sense, we'll do something. If it doesn't make sense, we won't.
Interesting. And sort of sticking on the same vein here. Obviously, Aston have sort of announced that merger with Torque, the Aussie company, and we've seen a bit of that last year. I think we'll see a lot more of it this year, where companies haven't been quite able to muster the enthusiasm from the market nor the cash from the market to actually do what they want to do. Inevitably, you're going to have people coming together in the hope that something might change. The story might change. The new format might gel with the retail audience out there. Who knows? But the point is, lots of companies are going to have to come up with a new model or a new way of looking at what they're doing, or it's going to be terminal. And I expect we'll see a lot of this. And it doesn't and these mergers don't necessarily mean it's a good thing. It just means it's the last salvo or the last sort of saber rattling before the inevitable happens. So it just shows you, actually. I think people watching, listening to this, and probably got views on this. Someone's got part of their portfolios might be in this category, where it's been tough as hell for the last 3-4 years for companies to stay relevant, stay at the table to be able to play this game, or junior mining, and raise the money to move things forward. And with, even if they have been able to manage all that, access to capital is hard, it's expensive, and the equities reflect that. People are not valuing companies like they did. Is it going to be any different in 2025?
I think, to be honest, yeah. I mean, I think, well, I would say the current capital markets and the current sources of capital, that's still going to be challenging. You're going to have to see a material move higher in prices and start to see additional acquisitions get made of various company assets before you start to see real capital come back into the sector. But again, the Mideast the Mideast has got the message. The Mideast is focused on critical minerals, and so I think you are going to see a number of transactions happen, backed by Mideast money, through 2025. I think that's going to be will be one of the big stories. When we look back in December and January, is what was different this year, and then in Mideast participation in the critical mineral sector, again, just from the response that we're getting, I think is going to be will be a big factor this year.
You kind of hope so, right? Because it just shows you what an incredible job you've done in terms of being able to access capital from strategic partners in the sector, because the industry knows what's going on. The industry knows what's needed, and more importantly, when it's needed. Because I think the people participating in the junior space are kind of kicking the can down the road. Mergers of equals. I'm talking about bigger companies. We see this a lot in the gold sector. It's like, there's no new ounces being created. It's just basically people with two sets of production coming together to create a bigger company with production, but no new ounces. That's problematic for what's coming down the line. We're seeing that across all the metals. There's a big looming gap coming, which no one wants to address, and no one wants to take the risk and exposure to either. I don't blame them in a way.
No, and I think, that's where, again, the government still haven't necessarily written a lot of checks yet. You're starting to see more. Canada Growth Fund did their first deal into Nouveau Monde Graphite. I think that'll be the other piece of the puzzle this year. In Canada, we're likely going to have a federal election this spring, so that'll keep them distracted for the first part of the year. But I think, as the year goes on, the discussions that we had with some of the new funding groups that are, again, government backed or government linked in Europe, have also started to make their first investments. And so I think you will see, for those projects that are of scale in the right critical minerals, are going to attract that, additional government capital, which will allow them to actually, get over the hump and get into construction.
Yeah, interesting times. So you reckon there's a federal election in Q1 at some point, do you? You mean?
Yeah. Yeah.
Just in crying and saying, no one likes me, so therefore I'm going to go if you don't change your minds. That didn't work?
Well, he's gone. We have a leadership contest right now for the Liberal Party. So
is he physically gone, or is he going to wait until?
No, he's waiting until he's still in charge until the leadership contest happens. But there'll be the leadership contest, and at the first opportunity, there'll be. I think the opposition will bring down the government, and we'll have an election sometime in the spring. And here in Ontario, our Premier announced last night a new election, which is going to be held in 30 days. So they've got a big lead in the polls right now. So we're not expecting any change at the provincial level. And they've been big supporters of mining in the province. So,
okay, interesting times. Well, good to see you. Hope you are well rested, raring to go for 2025. We shall speak to you again next week, or in a couple of weeks, probably, I think.
Yep, 2 weeks. Thanks, Matt. Take care, sir.
Thank you. Bye, Mark.